Let's get an early look at what we can expect from the local market today with Chris Weston from IG. Chris, thanks for checking in. Let's start with US markets overnight and what was behind that sell-off we saw in just the last hour or trade or so.
Yeah, I haven't got a definitive reason as to the last end of sell-off, but I mean, what we actually saw was a very whippy session again, driven by different comments from different leaders within Congress. Just basically everyone detailing that no one's taking the fiscal cliff negotiations very seriously. I mean, yesterday obviously we had a big sharp reversal coming through because President Obama suggested that they would look to strike a deal before Christmas, and November 21st would be a good date for that to take place. And then obviously tonight we've seen a big sell-off in risk assets, probably about a third way through the session. The S&P lost about 0.6%, the Dow lost about 71 points after John Boehner, the Republican Speaker, House Speaker, coming out and suggesting that no substantial progress had been made in the last 2 weeks. Well, I mean, that's pretty obvious considering as they really haven't come to the negotiation table in any kind of structural way at the moment, and that will start ramping up next week and going forward. We heard another Democrat, Mr. Schumer, coming out and suggesting that negotiations were then on the table, and then the market had a strong rally on the back of his comments. And then we saw Mitch McConnell coming out, he's the minority leader, coming out and suggesting that the Democrats weren't taking negotiations very seriously. So I think overall, I mean, if the market's being thrown around every time someone comes out with some sort of rhetoric suggesting things were looking slightly better, then we have a rally every time some senior person comes out and suggests that they are some way away from agreeing on revenue increases and other bits and pieces. We see a bit of a sell-off. But I think what's interesting now is, if you actually, overnight there was a survey released by Bloomberg who interviewed over 800 professional money managers across the world, and they suggested about 76% of those suggested what we're likely to see is a short-term fix. And I think this is what the market's anticipating, is we're going to get some sort of deal on the table with small concessions from both parties before New Year. Perhaps that November 21st deal would be the situation, which would then see a longer-term negotiation throughout 2013. But there will be a short-term fix and compromise being put in place from both parties. But at the moment, risk assets being thrown around. I actually think the European session was probably more constructive, more interesting. We saw good rallies across the board. Euro stocks were up higher. And if you look at sovereign debt, that's really been the trade of the year for a lot of hedge funds. Again, Italian yields coming down 3 basis points to settle at 456. What we're seeing there is really, really strong buying in Italian bonds. Spanish yields at the lowest levels now since March across the board. And spreads against German bonds really, really contracting. Italy got a really strong bond auction away last night. And it's clear that everyone seems to be wanting to buy sovereign debt. And I think there's a pretty good chance that we're going to see Spain request the OMT at the beginning of next year. They simply have to. They've got such a big funding requirement next year, 120 billion in new money. And then on top of that, obviously, the maturing debt, which they need to roll over as well, which will be probably going through the primary markets as well. So I think beginning of next year makes a lot of sense given the political calendar next year. But good gains seen in European markets. And whippy kind of headline risk associated markets in the US, but ultimately finishing marginally higher.
Yeah, you mentioned the risk appetite, which really waned during the session on Wall Street overnight. How does that bode for opening today? At the moment, we can see SPI futures in positive territory, up about 0.5%. How do you think we're likely to open, Chris?
Yeah, I don't know. I'm not exactly sure the fair value. I'm not sure if there's any dividends being paid out today, stocks going X, etc. But yeah, I think an open just above that 4,500 level seems pretty about right. I mean, BHP at the moment looks like it's going to open in positive territory as well. We're going to see a 1% plus gain based on the ADR. So I think that's going to be a positive place to be. Of course, you've got to look at Rio. They came out and announced that they're looking to do those $5 billion in cost-cutting exercises. London traders really rejoiced that stock was up significantly, I think about 5.1%. So that might see some follow-through coming through in that market today. The iron ore price down about, I suppose, about 0.8%. So that may be a marginal headwind. Gold's looking a little bit stronger this morning. We were trading around 17.19 on the spot gold price, so it's up a little bit today. So that may help gold stocks, although Newcrest ADR is pretty flat. But of course, we're closing out the month today, and if we get a close above 4,500, we're going to see a pretty flat month. But it has been the story's really been about telcos up 4%. We've seen the healthcare sector up over 6%. Discretionary's over 3% as well. So very, very interesting moves, notably in some of the media names. But yeah, the close above 4,500 would be very, very positive today, and I think private sector credit very much the key driver there, although I think Japanese markets today will be probably a bigger driver of our market given the data flow that's coming out of there.
Okay, let's talk about the RBA. Twitter is abuzz with forecasts and calls at the moment, and Terry McCrann, who we always watch closely in the lead up to these decisions, he's calling a cut 25 basis points. What about you?
Yeah, I've got to say, I mean, the swaps market's now 73% chance that's going to happen. I'd say that's about right. So, you know, as I said, I'd probably say a December cut makes sense. I think the capex numbers, obviously on the headline number, up 2.8%. You know, was better than expected. And of course, you know, I'm sure this has been widely talked about now. The spending on equipment up 6.2% will add to the next GDP print we see, but it's about the spending intentions going forward and the sharp drop-off that we've been seeing there. You know, the actual implied growth that we're seeing through the intentions of business spend is significantly lower than where we had been anticipating it. So I think that's the thing the RBA is going to look at certainly a lot more. I think now what we've got to be looking at is December 4th. If you're holding Aussie dollar contracts, if you're an Aussie dollar trader, December 4th is going to be the major date here, because this is when we actually find out the level of foreign buying of government bonds. Now, these obviously get released on a quarterly basis, and it's been one of the major reasons why the Aussie dollar has been propped up so significantly. So December 4, we get the rate decision, but we also find out who's been buying our bonds. If we see net sellers in the Q3, that could be a marginal negative for the Australian dollar. And then I think what's going to be the big date, and perhaps one of the biggest dates for 2013 for the Aussie dollar, is the Q4 capex numbers. We've talked about them yesterday, but this is when we get substantial 12-month clarity on business intentions going forward. And I think the market's going to be looking at them very, very closely indeed. So February 28th for me is just going to be a massive date, and that could shape the perception of how aggressive the RBA are going to have to be to prop up the non-mining sector next year. But at the moment, it does look like a December cut should be on the cards. And if we get a weak number in February, there could be a series of cuts as well. But right now, just one looks like on the horizon. And I think Aussie CAD looks like a great short for 2013 at the moment.
OK, December 4, Feb 28, two key dates to watch for the Aussie dollar. Chris, thanks for your time.
Cheers, Kate.
Chevron says the